So we are so glad that you're here because, I think that there is a nation of people who have no idea what happened a couple of weeks ago with Reddit and shorts and GameStop and what happened? What was this?
Oh, how long do I have? Huh?
Well, we don't want to short you, but we have a few minutes until the next commercial break, and then we have until a little before 9, and then we're going to continue talking afterwards live on Facebook when the WATD show is over. So you have about
Well,
3 weeks.
all right. Let me. It's very timely. Not to get too sentimental here, but it was my father's birthday today, and he passed
Oh,
away 6 months ago. So the
oh,
reason I mention that is because he was an investor, professional investor, and he had a saying that I don't know why I remember this, but it's very appropriate. He said, "He who borrows what isn't his and pays it back or goes to prison." And that's
hmm,
essentially talking about shorts. So if you borrow something, which is what happened with GameStop, and you sell it but you don't own it, you ultimately have to pay it back. And essentially that's what took place. So, my kids shopped at GameStop for many, many years. I spent more money than I care to admit at GameStop. And I always thought that there was a problem with the company because I'd stand in long lines, and I won't bore you with the subtleties, but I never invested in GameStop, and I wasn't surprised when the stock was trading around $5, and then I wake up one day and the stock's shooting up to $100, right? So what happened is hedge funds who thought they were smart, and they are smart, borrowed GameStop shares from individuals who owned it, and they sold it and got the proceeds, and then they basically had to buy it back. And a massive squeeze took place through Reddit, precipitated by the internet and communication on the internet. And you had a massive army of small individual investors throwing literally 10, 20, 30, 40, $50 at GameStop. When you multiply that times the millions, eventually shot the price up, and the shorts, the hedge funds, found themselves having to cover their margin calls from large institutions that were lending them the money on this trade. And it created an avalanche, basically. Does that make
hmm.
sense?
Yeah. So a number of phrases. First, I love that he who borrows what isn't his and pays it back or goes to prison. That's terrific. Your dad must have been an amazing person. Come up with that. Wonderful. So, what first? A couple of things. What's a squeeze? What is a squeeze in this setting?
Well, a squeeze is essentially if I sold something at $100 thinking it would go to zero, and it goes up to $110, I'm okay. I've lost 10%. But what's my potential loss? Unlimited, right? Whereas if I buy something at 100 and it goes to zero, I can only lose $100, but my gain is unlimited. So you flip that, and the squeeze is where the hedge fund has to post collateral for this massive, basically, loss that's growing proportionally. So if you borrow $100 and you owe the bank 200, the bank's going to come knocking. They're going to say, hey, we want some more collateral. Otherwise, the bank's on the hook.
So does GameStop get any of this money?
Great question. So the short, quick answer is no, but they could have exercised what's called a shelf offering. They could have sold additional stock. And I believe AMC actually did that. AMC actually said, my God, we have a shelf offering, which is something that they put in place probably years ago, saying that if they wanted to, they could issue additional stock, right, at a limited amount. And so AMC, I forget what the price went to with AMC, but GameStop, if they had a shelf offering, they could have issued additional stock up at $400 a share.
Hmm. So what's wonderful, Doug, is that there's this whole nomenclature, this whole language around this, like a shelf stock and things. I mean, we need a dictionary for this, but in essence, as an investor, as somebody who's been doing this for 30 years, what's your take on what just happened?
Well, to be blunt, I don't consider it investing. The hedge funds may differ. It is investing from that perspective, but from what the individuals were doing, and I've blogged about this, I know Mark has read these, it was a disaster waiting to happen, because what you need to realize is that investors think that stock prices follow a logical step pattern, in that if I buy something today at 100, then there's a buyer at 101, 102, 103, all the way up to 400. Not true. It's a marginal pressure on that price. So if there's a lot of demand for a stock that opens at 100, it can jump from 100 to 200 without hitting anything in between. So just you flip that around, when the music stopped and the chair was pulled away from the circle, GameStop was at 400. The next stop down, excuse the pun, maybe 300, 200, 100, 80. And everybody, most of the people will never know this, but my hunch is that if you were to basically plot out where the purchases happened, a lot of them were above 250 to 300, even 400. And those people did not get out up there. They had dreams. I heard one story today on CNBC where one individual, I forget, he was a PhD student, I believe, at a Ivy League college, had to basically he was thrown into shock therapy by his friends, because he couldn't play tennis. He was checking his GameStop price every point. And they said, look, you need to sell. And he turned $250 into like $100,000, $200,000. He got out. Most people did not get out.
They didn't mean to.
Pardon me?
Well, for a lot of them, it wasn't about making a profit. A lot of it was the Joker setting the pile of money on fire, about sending a message.
That's great, but I mean, if you're only losing $50, $100, that's fine, and I don't disagree or have a problem with that. But I'm sure they like making a profit at the same time, right? I mean, it's one thing if you can stick it to the crowd that's setting up a trade that probably shouldn't exist, but it's another thing if you're losing money on top of it, right?
Is there enough of a groundswell of retail investors that they could actually dent the existence of the way the market is being played right now?
Well, I mean, there are multiple ways to do it. I'll tell you, what I have a strong belief in is the wisdom of crowds and the amount of intelligence that is out there. I drive a lot of my research off of a site called Seeking Alpha. And these are individuals that publish. There are hundreds, thousands of individuals publishing, and they're in many cases brilliant insights into companies. I'll after I get off this video, I'll get on Seeking Alpha for a couple hours. I mean, I'll wake up at 5:30 in the morning, have new articles there, and there's a lot of really good grassroots research that's done. You don't need to be bankrolled by a billion-dollar hedge fund. And this is accessible to anybody. I mean, my 19-year-old son upstairs, he's following Seeking Alpha now, coming down here saying, hey, did you see this? Did you see that? This is all accessible to everybody, where years ago, only the top institutions had access to this research.
So Doug, I want to come back to this, but I have to seek our sponsors as well. So we'll come back to Seeking Alpha after we seek our sponsors. We'll take our commercial break. We'll be back for the final part of this episode of Dr. Joe.
Stretch the